Give a man a gun and he can rob a bank, but give a man a bank and he can rob the world. Deutsche Bank's chief economist Torsten Slok recently released a note to clients titled 20 Risks to Markets in 2020. The biggest risks include wealth inequality, trade war uncertainty, growth issues in China, Europe and Japan, US government debt levels, interest rates in the US, and declining corporate profits. But coming in at number 19, house price crash in Australia, Canada and Sweden. Yes, according to Deutsche Bank, the Australian housing market is not only a domestic risk, but a global one too. We really do punch above our weight, don't we? Apparently Brexit is less of an issue than the Australian housing market. At the global level, the Australian house price to income ratio is in nosebleed territory, where on average the global house price ratio has been falling since 1975. Apparently in Australia, we don't like affordable housing and consequently made it a national policy to be the best in the world at making housing unaffordable to its citizens. However, has this helped the Australian economy? Nope. Australia now has a one-speed economy, and that speed is slow. Mining and non-mining states used to take turns growing fast. Now they are all weak together. Australia urged to unleash stimulus measures as economy stalls. Government pressed to prioritise tax cuts and spending over pledge to balance budget. Storm clouds. What is happening with the Australian economy? Despite record low interest rates, low unemployment, booming exports and high government spending, the economy is barely growing. According to the latest data from the Australian Bureau of Statistics, dwelling investment continues to decline. Investment in both new and used dwellings fell by 6% in the June 2019 quarter. Both mining and non-mining investment is looking fairly flat, with the mining industry suffering significant falls over the last few years. Household savings are also in decline, with the savings ratio falling significantly. I wonder why. Perhaps it has to do with our record levels of debt. Australians' record debt is making us work longer, spend less. Household debt has Australians living in house of cards. Even the Australian Treasurer is showing some concern over Australia's debt levels. Frydenberg signals reforms amid mega trends of rising debt and ageing population. According to data from the OECD, Australians love debt. We are one of the most indebted nations in the world, with household debt at 216% of net disposable income. This beats the Swedes and the Swiss, as well as Korea, Canada, the UK, France, the US, Japan, Germany, pretty much everybody. So why are we in so much debt? According to Gerard Minnick of Minnick Advisors, housing is to blame. He said, "Why are Australians so in debt? Because we went out and bought houses. Not built houses, went out and bought them, and pushed the prices up to among the most expensive in the world. It is literally a house of cards. Regular Australians are taking on million-dollar mortgages to buy the houses they want. Steve and Bev Jones, who live on Sydney's North Shore, less than 10 kilometres from downtown Sydney, recently told the ABC, "We have about a $1 million mortgage. We went into it eyes wide open, knowing what we were taking on. It's not great, but we wanted to own our own home, so it is what it is." Obviously, such a huge mortgage affects their lifestyle, Ms. Jones said. "I worked all the way through my pregnancy and then I worked every day thereafter, so I didn't take a break. I think it would be very hard having to go back to a normal part-time or full-time job, and I think that would be difficult for our family to do that, but I'm not going to lose the house over going back to work full-time or part-time or whatever." Yes, regular Australians are forcing themselves to overwork in order to keep their house. What a situation we have created here in the land of Oz. There's a meme out there that says Australia is a land of houses and holes. That is, the Australian economy relies too heavily on real estate and mining, and I think that's apt. We're too busy focused on the wrong things. Instead of investing in Australian science, technology and manufacturing, we're instead digging holes and building expensive wooden and stone shelters. It sounds like something people were doing 10,000 years ago. So what can be done to fix it? The Conversation Australia recently asked 13 leading economists what could be done to fix the Australian economy. All 13 backed the RBA's approach over that of Treasurer Josh Frydenberg. Specifically, they agreed that the bank needs help. The adjustment of interest rates by the Reserve Bank is nearing the end of its effectiveness. All 13 economists think that extra stimulus is needed from both the Treasurer as well as the RBA. Things like extra government spending on infrastructure and so so on. 11 of the 13 believe that the government should abandon its goal to deliver a budget surplus in 2019-20. Economist Warren Hogan said that achieving a surplus in the current environment would have zero value. 5 of the 13 economists are concerned about the RBA adopting so-called unconventional measures, such as buying government bonds in order to push down long-term interest rates towards zero, a practice known as quantitative easing. Adrian Blundell-Wignall said that QE hasn't worked in other countries. A quantitative easing avalanche policy by the European Central Bank, larger than the entire UK economy, has left inflation below target and growth fading. Quantitative easing destroys the interbank market, underprices risk, and encourages leverage and asset speculation. Steve Keen said that in both Europe and the US, quantitative easing enriched the banks and drove up asset prices but did very little to boost consumer spending because the rich don't consume much of the wealth. Ultimately, the 13 economists agreed that the government needs to step up and sort out this mess because the economy is in need of dire help. It would not be very wise to expect the RBA to fix everything knowing that the bank's cash rate is close to zero and the effectiveness of the proposed unconventional measures are in doubt. So what are your thoughts? Is Australia a one-track economy? Are we just a land of houses and holes? Is debt killing us? And if so, what can be done about it? Have we just lost the plot in Australia, thinking that the only worthwhile thing to invest in is housing? Let me know your thoughts below.